Alright guys, yes, the Fed came up with the biggest news we were all waiting for, right? Yes, they came up and said we are ready to cut rates. Everybody's talking about this, but there is a missing from that call that no one is talking about it, that we have to be careful, okay? Yes, and that's what we're going to discuss today. On this video, we're going to discuss what the Fed says, where the estimation of the rate is going to be, when they're planning to cut the rates, and what is that bad news that no one is talking about it that can be a really good indicator that if Fed doesn't manage this well, we're going to get into a recession. They will have to be really careful with this. Also, I'm going to tell at the end of this video when do I believe the Fed is going to come up with the first cut, because I think based on data we can come up with the date or at least an estimation we get when the Fed actually is going to do this. And also I'm going to be telling you what am I going to be doing. Yes, because I have a lot of plans for the rates and for me when this actually become true. So hey guys, if you haven't been in my channel before, my name is Omar. I like to talk about business, money, everything related with the stock market. And if you like that type of chats, hey, this is your channel, so don't forget to subscribe and smash the like button, because I'm gonna be keeping you with all the information. But with that said, let's start with the whole conversation. Alright, so if you go to any website right now, you're gonna see that everybody's talking about the Fed, hence that we're gonna cut in rates. The Fed mentioned that they're ready to cut rates. Yes, that's the norm. Yes, if you go there, everybody's talking about this, and the estimation are already out. If we see most of the research, we're talking about the Fed is gonna come up sometime in September, and we're gonna get the first rate cut. What this is gonna lead us, based on the statistical numbers that we have right now, is that we're gonna end up in September after the first cut between 500 and 525 points. This isn't a great number. This is an amazing number, because we were a year ago on the 7 and some 9 points, which was insane. People were not able to buy cars. People were not able to buy houses. I mean, really bad. But then moving on the months, people talking about 3 cuts are gonna happen this year. We're gonna have November with another cut and December with another cut. Both of those cuts are indicating that we're gonna end up, at least in December, close to the 450 to 475 points, which is insane. I mean, really good if the Fed is able to go there. They need to be careful. They cannot go super fast, because if they go too fast, inflation might go up, and that is the biggest scare that any person in the Fed government will have right now, right? You don't want to repeat what happened in previous year when you cut rates super fast and then inflation get out of control again, because no one want to get there. So, but everybody's talking about this. This is insane. This is good. This is going to help everybody. But no one is talking about the other thing that the Fed mentioned on that call, right? People were talking about, hey, rates are good. We're going to get really good cuts and we're going to be fine. But now, Fed says that they are ready to cut rates because they want to focus in some other areas that are getting really bad. Yes, guys, the Fed came up and says, hey, we need to be careful with unemployment. We're gonna focus on keep unemployment low, because we're seeing some spike and we need to avoid this to go crazy. Guys, this is a real important thing. Why? Because right now, based on the data, we are in a 4.3% unemployment rates. This number most of the time lag a little bit with reality, right? So we might be on the 5 right now, on the 6 right now, but for sure the Fed is seeing something that we are not. They probably see this number being higher. They're probably being worried about this number going crazy, because guys, last time the unemployment went crazy was in 2008. And we know what happened in 2008. We got the huge recession, right? And we need to avoid this. So I'm guessing the Fed is already having conversation with these companies, big tech, pharmaceutical companies, healthcare companies, to, hey guys, we're gonna start giving you a lot of money. We're gonna start cutting rates. You're gonna have a growth rate higher than what you have right now. So please keep your employees with you. Because if you see the news, every technology company is be cutting a lot of employees right now. There is a lot of layoff in the streets. And this is affecting everybody. And if this get out of hands, guys, we're gonna get in a really bad position. We're gonna have a lot of people filing for unemployment, and that's gonna cost a lot to the economy. Also, you have to understand that unemployment rates can go super fast. It's not like inflation that you see them go up, steady. No. Unemployment doesn't go like this. You can see what happened between 2007 to 2008. It just jumped. And that's the thing with unemployment. If you don't keep control the unemployment, it's gonna go crazy up. We're gonna get in a really bad position. A lot of people are gonna be struggling. Those people that are struggling won't buy anything, and cutting rates won't mean anything for us because the government will have bigger problems. Yes, guys, this is crazy, but this is the bad news that the Fed brought up on this meeting that no one is talking about it. But now, let's talk about what is the good thing about the cutting rates, right? Hey, there is a correlation between cutting rates and what happened to the markets. As you guys can see here, this chart explains what happened to the market the first 12 months after the first rate cut from the Fed. As you guys can see, we got insane gains from those times. And this is why I'm super excited about this timing, right? Because before, we didn't have enough data to actually predict, hey, what's going to happen. But now we can see that on average, every time the Fed start cutting rate, we're going to get a bump in the stock market between 15 and 25% on average, which is really good. The only two periods that this didn't happen was 2001, we got the bubble, 2017, which is straight related with unemployment, right? On 2017, we got the big recession, unemployment spike, and then nothing happened. We were losing money as crazy. But this time, if the Fed is saying we're gonna focus on unemployment, hopefully they're able to control it and make sure that we don't get to this really bad position, telling me that, hey, this is gonna be good for the stocks. And what stocks are gonna get benefit the most? Well, guys, I put a video, you can check it here right now. I put a video last week talking about what is the best options for you and me while the Fed start cutting rates. And I'm gonna repeat some of this, but if you wanna get in deep, just check the video right here, guys. So every time, this is the correlation that exists between a small cap and big cap every time the Fed start cutting rates. As you guys can see, S&P 500 always outperform the Russell 2000, which is the 2000 small caps in the US, right? As you guys can see, every time you are in a period when not rates cuts or nothing happens, S&P 500 will beat the Russell 2000 in any small cap, right? But as soon as we start cutting rates, look at what just happened. July 2024, everybody knows that in July 2024 that the Fed was coming to cut rates. We didn't know it's going to happen in August, we didn't know what's going to happen in September, but we knew it's going to happen in the next 2 months. Look at what started happening with the small caps. They start outperforming the big caps. Yes, guys, they're starting outperforming all the big tech, all the big companies. Why is that? Because people will put money on those stocks. The Fed is gonna start cutting rates. That's gonna bump growth for some company. And what are the companies that grow the most? Yes, small caps, because they are in a growth path, right? So, and we can see this reflected already. Look at what happened after the Fed meeting last week. Upwork. Insane bump after the Fed talk. I mean, Upwork is just about employments, people doing, 1099 type of work when they just want to work by themselves, and that's it. Big spike. What is Upwork? It's a small company. It's a small cap company. Now, look at this. Rivian. Rivian did exactly the same. Goes super crazy. Rivian, even though some people debate if it's a small cap or a medium cap, is still in a growth path. It is on the car industry, right? All these cars industry are gonna get bumped because right now, if you wanna buy a car, you have to deal with those high interest rates that they give you. 5.5, 6.5, 7, 8, depending on your credit score, of course, but you're gonna get a really high rate, which is affecting their sales. But with this, rates are gonna start coming down. Cars company are gonna be able to sell the same car with the same price for lower payments because the interest rate are gonna be lower. So look the bump, super crazy. This just happened with the Fed saying we're going to cut rates. We're ready. They didn't cut rates. They just announced that's going to happen. And this is start happening. Imagine what's going to happen when the Fed actually start cutting rates, right? I mean, a lot to think about this, because these stocks are the ones that are going to get the biggest swing. I'm not saying this one is specific, but really good stocks, a small cap stock with good valuation, good balance sheet, are going to start growing a lot and getting a lot of money into them. So keep that in mind. Now, let's talk about Zillow. Zillow cannot find a way to go up. I mean, Zillow has been down and down and down for 3-4 years already. As soon as the Fed says we are going to start cutting rate, look at what happened. Why is that? Guys, we were in a period when if you want to buy a house, you have to buy it with an interest rate of 6, 6.5, 7, 7.5. We're still in that. Do you know how much that impacts on your payment? That impacts a lot on your payment. If you're buying a $300K house with a 4.0 interest rate, you're gonna be paying like around $2,100 in your mortgage. But now with the current rate, with a 7, 6.5, you're gonna be paying $3,000, almost $1,000 more for the same house, same price, right? What's gonna happen? Rates are gonna get cut. Then what's going to happen? People that couldn't qualify for houses before, now they can qualify for houses, and they're just going to start buying houses. And who is going to get the most benefit? All these websites that you use, especially Zillow, which is my favorite one, that you use to buy houses, they're going to start making a lot of money. People are going to start buying houses. And we have to have the conversation about who actually is going to make the money. Are going to be people trying to sell their old houses? Or it's gonna be companies building new houses, right? Because let's be honest, if you bought a house with a 3.5 or lower, 4.0 or lower interest rate, you won't want to sell the house. I'm pretty sure you don't want to sell a house that 3 years ago used to have you think it was an expensive mortgage, but now if you want to rent it or you want to sell it, you're gonna go and buy another house and pay way more money, even though the rates are cutting, right? So, I mean, something to think, and this is something that we might need to talk in another video, because guys, there is a big opportunity on the real estate market right now as well, in my opinion, of course. Now, look at this, Robinhood. Robinhood is just jumped. That stock is $21 already. It used to be $7 2 years ago. Guys, insane. And let me tell you, I believe the bank sector is the one that is going to get a little affected for these rate cuts, because they won't be able to get all the interest rate that they were getting. Not anymore. Actually, they will have to figure out how they're going to start decreasing the saving accounts they have with a really high rate, right? If you talk about the Apple account, they give you 4.5%. The Amex account, they give you 4.75%, I believe. So all those accounts are going to start getting cut, because they won't give you those interest rates when the rates are actually going to be lower than that, right? So things that you have to put in your mind to be careful, because some stocks are going to get win, but not all the banks are going to, or financial institutions are going to start making a lot of money, right? So that's something you have to think. Look at the Russell 2000. A small cap. I just showed you how the Russell performed way better than the S&P 500 when rates start getting cut. Guys, I just told you last week on my video that the Russell is going to go crazy as soon as the rates get cut. This was the Fed only saying we're gonna cut rates, not even cutting rates, and look at what happened that day. Russell 2000 blow up, and it's gonna keep going. This is not stopping, guys. But now that we know what's gonna happen, what is my prediction, what's gonna start happening, let's talk about when the Fed actually is gonna cut rates, right? Because they just says we are ready to cut rates. They didn't say, hey, we're gonna cut rate in this day. I believe this is gonna happen in the next meeting. And as you guys can see here, this is the calendar for the Fed's meeting, right? You guys can see that they have been meeting almost every month, and they have a lag between, we can say as what, 3 or 2 weeks after the planning meeting. What I'm saying here is, if you check the July meeting, supposed to happen between the July 30th and 31st, and actually happen on August 21st, right? What is that? Almost 3 weeks later. Same for June. It's supposed to happen on June 11, June 12, actually happen in July 3rd. This is telling me that it's gonna take around 3 weeks actually after the planning meeting. What this, in my opinion, means is that, look at this, September 17th is supposed to be the next meeting. I believe the next meeting is the meeting that they are going to start cutting rate. They're literally gonna cut rate that meeting. And if this is true and we follow the data that we see here, we can tell that even though the meeting is set to happen between the 17th and the 18th, I believe what's going to happen is if you add 3 weeks, this actually is going to add, the meeting is actually going to happen at the end of September, which is completely fine, 1 month from now. So if we know, or follow this calendar, we can estimate that the next meeting is going to happen on September 3rd week of September or last week of September, and that's the time when they're actually gonna start cutting rates, guys. Super important to know, because even though we don't time the market, we don't care anything about that, it's really good to know when you're gonna buy a house. If do I want to buy a car? Should I wait? You can wait 1 more month and buy the car next month, right? Might be cheaper just because of rate. Same for houses, same for everything that is affected with rates, guys. So, and what am I gonna do? Well, I've been buying Google really heavy this past month. I just bought Google this past Friday again. My plan is I'm gonna keep buying Google for now because I'm building this massive position until we actually get to the cut rate. When we actually get the cut rate, or if I get faster to the position I want to build, I'm gonna stop buying Google, and then I'm gonna go back to look in more growth small caps. And I have a few in mind. I actually own a few of them already. I might just keep adding more and more money on those stocks, because one of them is a stock I really love. I believe you have a problem. Yes, you have a problem, but that stock used to have more cash in hands than what the market cap was. And that is something that never happened. So guys, this is what I'm gonna be doing. I'm for sure gonna keep putting money in this market. If we get to the recession, even better. As long as we don't lose a bunch of jobs, of course, because the stock are gonna go crazy down, and it's gonna be a better opportunity for me to buy more and more of these stocks that I actually wanna buy. So, if you like this video, don't forget to subscribe, smash the like button, and you guys let me know what your estimation for when the rates are gonna get cut are. And guys, I see you in my next video. Thank you.